Welcome back to the Market Matrix, and today we're speaking about the falling wedge. Now, the falling wedge is just like the rising wedge, except, well, it's a little bit different as usual. Now, wedges, pennants, all these patterns that have triangles within them, they all look a little bit different. So we have the pennant that looks like this. This is a triangle. We have the wedge that maybe looks like this. It's also a triangle. Now, with these triangles, a lot of times what we're going to notice is that the direction it breaks above or below is the direction it goes. We'll get into these later on when we speak about symmetrical triangles and ascending triangles and descending triangles. But knowing that it's in a triangle helps you out, because at that point you know where the trend resistance is and the trend support, and you know where to expect the move once we get that break above or below. So let's get into the falling wedge now. Now, the falling wedge, it could come from an up move, a down move. So let's get into it and we'll see how it goes. So we have this stock that runs up, running up, and then it starts pulling back. It's pulling back, it's pulling back, it's pulling back in this weird way. Remember, the bull flag, we had something like this and this. The bullish pennant, we had something like this and this. Now, if you notice with this pattern, you're going to see sort of both of them in the sense that, okay, the flag was a pullback like this, and the pennant was consolidation like this. So we have the triangle, that's why it's similar to the pennant, and then we have the pullback in this downwards trend, which is why it looks like a flag. So it's sort of a combination of the two. Remember, the pennant was like this, the triangle with consolidation like this, and then the flag like this with the move back like this. So imagine both of them put together. It's pulling down, but it's also in a triangle. So this is the falling wedge. And just like the rising wedge, if you didn't watch the other video, it gets the name wedge because, well, it looks like a wedge. It looks like a doorstop, for example. Like when you, and I used the same example in the other video, and like when you're in school, elementary school, they had these wooden blocks where they put on the door so the door stays open. So this is just like that. It gets that shape, very similar. So here's what happens. The price runs up, buyers are aggressive, and then sellers start to step in over here. Buyers start to step in, sellers start to step in. So you can see the trajectory at this point is down. It's going down. It's going down. So there's lower highs, there's lower lows, but it's slowing down a bit. Over here, it was aggressive moves down, a little bit less aggressive, and over here is just stopping. It's like they pumped the brakes a little bit. If you can tell, over here, buyers are aggressive. It came straight down. But you could tell they're pumping the brakes a little bit on the selling. Maybe a little bit buying is happening. Let's see what happens. It's getting tighter and tighter. So what we should wait and see for is when we get a move, if we get this move up here, what we should expect is a move up here to these highs. We're not going to measure the move like we did in the other patterns, like, for example, the cup and handle, the bull flag, things like that. We are not going to do that. For example, we measured this move and then we put it above the breakout, and that's where we expected. No, in this case, over here is the top of the formation. This is the highest point of the formation, so this is where we should expect the move. And the entry is, look, we got a candle, a solid green candle that broke above this trend over here that we had. So you could tell that buyers finally stepped in aggressively. So we got this candle to close above this trend, so that is where we want to enter the trade. We want to enter it for a long trade at this point. At this point, we are thinking, okay, when it was first a triangle and we never had this, we were thinking, okay, let's see where it goes. We didn't want to stick to the idea where we're bullish. We didn't want to set that bias in our head just yet. So what we want to do is we want to wait and see. We waited. We saw it broke above here. So at this point, we should thinking, okay, bullish, all the way up here. This is where we should expect the move to. So we enter over here. And then what you should do is wait and see what happens. So it has this whole move, and you ride that whole wave. Great. Boom. Now at this point, it rejected over here, remember? It came right over here. At this point, it had its move, so you should probably exit the trade and take your profits. But here's something interesting to look at. Once you get out over here, it's good to sit back and see what happens next, because we had a top over here, and if this is the next top, then what is going to happen naturally is one top, it came down, comes up, another top. If the sellers step in really aggressive over here, if they saw, okay, we stepped in over here aggressively, we pushed the price down. If they see over here, okay, let's step in as aggressive or even more aggressive this time, and they push the price lower, what can happen is this thing could turn into a double top. So you could again enter another trade over here at this point. And this time it's going to be a short trade anticipating a move lower if the criteria stand in favor of your thesis. So if you see sellers getting aggressive and this thing coming down, and then if you see it break this neckline, if it forms over here, if you see that happen, and if it retests it, then maybe go for a short trade. That's why it's always good to wait and see what happens after you exit your trade. This thing can also do another thing. It can keep going up from here and then come back down, retest its resistance as support, and then go up higher. So always sitting back and seeing what happens next is most of the time a good thing, so that way you can maybe set yourself up for another trade. But it's not always going to be like that. You're not always going to have another trade after this. You know where you needed to expect the move up to. We got the break over here. We entered over here. We said, okay, the expected move was to up here. We got that move and we exited the trade. After that is where you want to sit back and see if you want to maybe, if that's it, you feel like the trade is done, cool, get out the trade. If not, still get out the trade and then see what happens next. The next trade, the next potential trade, see what happens next. If it comes down, okay, cool, let me set myself up for another trade so I can potentially make some more money. If it breaks above, let me see what happens to potentially also take another trade. So this thing can also come from a different direction. Remember, we had this up move and then we had something like this. Now let's see what happens with it coming from a down move. So we have the stock that's coming down, and then the sellers start pumping the brakes a little bit, but they're still there. The sellers aren't weak at this point. They are still there. It's still going lower. If you notice, it's still going lower. It starts like this, boom, 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 lower highs, lower lows. So this thing is still in a downtrend. And up until that stops, we can't assume that it is going to go up. So we have this falling wedge form. We see it right there. We see it getting tighter. So remember, when we looked at it coming from an up move and we had the break above here, we expected a move to the top of the formation, the high point of the formation. So in this case, if we get this break above here, we should expect the move up here. But let's say we get something like this, where we get the candle to break and close below this trend support over here. Again, this is trend resistance, this is trend support. It broke above trend resistance initially, which is why we felt more comfortable to enter the long trade over there and it be bullish for us. Now, it did the opposite. It broke below trend support. So these sellers that were here throughout this whole thing, they didn't go anywhere. They stepped in over here. The price was getting tighter and tighter and tighter. You can see these three candles over here are indecision candles. We'll get into candles. We'll definitely get into candles a lot more. But these are indecision candles. And what that means is that the direction isn't decided. It's a fight. It's a fight. The price is sort of stagnant. The buyers are trying to send it higher. The sellers are trying to send it lower. But what we do know is we spoke about the wicks. So we know the price reached all the way down here and the price reached all the way up here. But the opening and closing price were very similar. So yeah, open here, went all the way up here, all the way down here, but the closing price was basically the same. And what does that signify is that there's no direction just yet. Over here in this case, we got a full red candle. The price opened over here and flushed lower and closed over there. There was basically no fight with this candle. Price opened here, flushed lower, and closed over there. So this is a decent enough reason for us to go short on this trade. It broke the trend support, and we have some aggressive selling. So maybe we get another move like this, another move like this. So in this case, we want to take the thesis of this going higher out of our heads because we never got this break above trend resistance. At this point, we got the break below trend support. So what we're going to do is enter a short trade in that case. You enter the short trade and then you ride the wave and then bada bing, bada boom. So I hope this video was helpful to you, and I hope that maybe if you check out the other videos, those will be also of help to you, and the future videos. We're going to get into more things other than just candlestick patterns. We're going to get into maybe other candlestick formations. For example, this is a big candlestick pattern. Some candlestick formations, it is just a matter of 3 candles or 2 candles that tell you that a reversal is incoming or a continuation is coming, or it shows you that buyers are much more aggressive, and at that point they will send the price eventually higher. So these are candlestick candlestick patterns we're going through at the moment with all these videos, and then eventually we'll get into candlestick formations and support resistance coming soon, and a bunch of other things. So if you're curious to know more about that and learn more about the markets, and dive into the matrix of the markets and find out what's going on in between all these charts, stay tuned for the future videos. Thank you again for watching.